Cool. All right, so I'm with Indelible Ventures. A little bit of background on who we are. We're a seed stage venture fund focused on tech-enabled B2B products that can scale internationally. We're a foreign domiciled fund, but we're focused exclusively on the Malaysian market because we see a lot of opportunity here with Malaysian entrepreneurs. A little bit of background about myself. I'm the managing partner of the fund. Over my career, I've managed hundreds of millions in assets, worked with some of the largest institutional investors. I've worked with hundreds of companies across continents, across a wide range of countries, and I've helped scale many of them internationally. So the topic for today is, I'm sure, an area that a lot of people want to get a better handle on, which is the investor pitch deck. Since this is kind of the turning point that leads you towards successful investment, this is obviously a very important topic. So we're going to talk a little bit about what makes a successful deck. So I'm going to go through some notes in regards to the components of a successful deck. I'll share some data points, and then, as was said earlier, we graciously have Jeff Tan in order to do like a live walkthrough of his company's pitch deck. And I've already given the warning that I'm not holding back, and I'm essentially going to think out loud as I go through it. So hopefully I don't scare him off, so then afterwards we can have a conversation. I can have a conversation with him and talk about his reactions to my thoughts and so forth, if it matches any of the market response that he's had so far, what could be updated or improved, and then we'll close out by opening it up to the audience in order to get some questions to see if we can field any of the concerns or otherwise for the people that are here in attendance. So moving into the topics, I just want to highlight first and foremost that, everyone realizes that as you're growing a startup, you iterate your business, but also when you're going out and trying to raise capital, you should also realize that you'll need to iterate your pitch deck. You'll get feedback on that, and you should take that feedback and work it in. So it's essentially a loop. If you design your deck, you send it out, you collect some feedback, and then you adjust the design of it based upon that feedback and send it out. It's not necessarily saying that you're pivoting your business. It's just crafting the story in a compelling format. Sometimes perhaps the message isn't getting conveyed correctly, so you want to try and get that feedback so that you can optimize your pitch deck and increase your chances ultimately of the target that everyone's striving for, which is a successful fundraise. So one of the things about this that I'm not going to recommend a particular service, but there are tracking services out there. I'm very familiar with getting sent pitch decks using DocSend. And one of the positives of these types of tracking services is that instead of simply sending out a PowerPoint or a PDF, and then basically you're in the abyss. You don't know whether or not the person opened the email, whether or not they ever looked at the deck. Then you're saying, okay, well, I'm going to follow up in 5 business days. I'm going to give them a week to look it over, and all those sort of things. And even then, you don't know whether or not, you have no insight in, how much time did they spend on it? Did they open it and close it? When you look at some of these services, I would encourage people to check them out. Some of them have free features, some of them are freemium models. So I won't necessarily try and promote any of it, but I think that there's some value in what they provide because, essentially you can send it out and see if somebody actually opens it. You can see how much time they spent looking at your deck. You can see how much time per slide they spent looking as they flipped through it. And so when you can see that, that's an important component of your feedback loop, because one, whether or not your email to whoever you're sending that deck to is effective, whether or not they're actually linking through, clicking on that link to go see your deck. And then you can have better insights into your deck itself. So if you review your deck and say, okay, there's these 3 slides which I think are the most important concepts that are like the centerpiece of my entire story. But then you look at the data and people are spending 2-3 seconds on it and just kind of zooming past it, then perhaps the message isn't getting conveyed very well. There's different sorts of interpretations you can get. I mean, mind you, it's small amounts of data points, but it's a lot more than I think the majority of people out there are currently collecting. And so every little bit helps. So I would encourage people to look at how you can find ways like these tracking services in order to get a little bit of extra insight into what's going on with your pitch deck. And some data points here from DocSend, so they analyze, I mean, it's primarily US centric, so it's really focused on that market. So some of the information is going to be skewed. It may not be 100% applicable, but I think in the aggregate, the lessons kind of really do apply, which is you do not have a whole lot of time in order to entice an investor, in order to get interested. And so when you look at the amount of time that people spend looking at these pitch decks, it's very short. And if anyone's been to like a demo day or a pitch contest or anything like that and have struggled to stay within 5 minutes in order to explain your deck, imagine that when you send it to an investor, they're flipping through it a lot faster than that. So you really need to try and get their attention and get them interested. You see a big difference here between the ones where they successfully raised versus ones where they've been unsuccessful. I guess 2019 it was not so big of a difference, but 2020 it looks rather different, to where I'm not sure what's going on there. Maybe just there's so many opportunities that people are opening and closing it really fast, but there's some interesting data that you can extract from it. But the key point is that it moves very quickly. So there's not a lot of time in order to get your point across and get somebody interested and make a mark on them. All right, cool. So let's then talk about the components of a good pitch deck, so that you can make that key impression and get the follow-up meeting. So the way that I'm going to set up this next section is I'm not going to talk about every topical area that could end up getting put into a slide deck, because there's a lot of different variations. But what I'm going to focus on is what I see as the 6 key components in telling your story. And I keep on saying story because I think it's really important that when you put together a pitch deck, you want to focus on the storyline. You want the flow as it goes from slide 1 to slide 2 to slide 15 and so forth. You want it to have a very good flow so that when somebody's picking it up, it reads well, that there's a logical connection from one to the next, and it has that positive flow. So the storyline is really important, and there's not really a one size fits all. I'll leave to some data, and there's general rules of thumb in regards to what should come first, middle, and last. But you need to make sure that it actually fits with what you're doing, because there's a lot of examples out there of companies that have done really successful fundraisers where, okay, the general rule of thumb is that the team slide goes towards the end. Well, I've seen a lot where the team slide is the first slide. It just really depends upon what your storyline is when you're out there pitching. So I think that's first and foremost. The other aspect that I'll key in on is, it should be relatively concise and clear. So don't overload things with a lot of words. Generally speaking, as a rule of thumb, if you have more than 50 words on a page, you should reduce it. Again, these are kind of rules of thumb. I've seen successful decks that have gone against the grain, but I think by and large, we're trying to move towards where the high probability outcomes are, and the high probability outcomes are ones that follow these rules of thumb of just keeping things clear with less words. So let's get into the components. And so the first one that I'm going to talk about is the problem statement. And so here you need to define what the problem is. What is it that you're looking at addressing? You need to have a very clear and easy to understand explanation of what this problem is, and you should emphasize the relatability of it. If you're in a type of if the problem statement that you're looking at is very niche or hard to relate to, you need to figure out some way in order to develop some relatability around that problem statement so that somebody that's looking at your deck can end up having a little bit of empathy for whatever your problem or target market is. And sometimes adding some numbers or adding some sort of graphic or statistic or otherwise can help show some of that relevance. Is not always necessary. But what you're looking to do is make sure that it's understood in a simple and concise way. Because if they understand the urgency around that problem, and you can get them understanding and empathizing with that problem, then you have them hooked in order to continue on with your deck and continue on with your storyline of what's next, what are we going to do about this problem. And that's the key point that you want to take away from here. So a couple of examples. I think most people have seen this one. I would note that there was a recent interview not too long ago with Mike Maples of Floodgate. Floodgate's a super famous VC out of San Francisco. They did Twitter, Twitch, a whole bunch of the early ones. And the guy was recanting the story of the Airbnb guys showing up in order to pitch. The only problem is they didn't have a deck. They didn't bring one. They thought they were going to do a demo. They show up at his office and their website is down. So unfortunately, he missed that one, but it's an interesting one because now everybody knows the Airbnb deck because it's one of the exemplary ones out there. But you can see problem statement. Very easy to understand. It's very relatable. It reminds you the industry of hospitality is something that a lot of people can relate to anyways. There's an old version out there circulating around back when they were doing their seed round as well, which doesn't have quite the design flair. So it's certainly there's been some iteration on their behalf, changing from Airbed and Breakfast to Airbnb and all that kind of stuff. A different one, this one actually is a very recent fundraise, a company called Almanac out of the US, and actually Floodgate, coincidentally, it wasn't on purpose, but coincidentally they were one of the backers of it. Me personally, this is quite crowded. When you look at that middle section of these graphics, it's quite a bit crowded. And this is, the way that they did theirs, their problem statement is actually multiple pages because these sections, they can be multiple pages in order to get the point across. And so it leads up to it. And then you get this problem statement that no integrated platform exists to help professionals. And then you do actually have this easy 1, 2, 3. What's the points? You have some logos sitting at the bottom that relate back to it. So visually, it's actually pretty easy to digest, even though my personal opinion is that middle section makes it a little bit crowded and a little bit too busy for my personal taste. But again, this is an example of getting the point across. So that's the problem statement. If you get somebody on the problem statement, now you actually got to say, okay, well, what are we going to do about it? What's the solution? You got me on the problem. Now, what's the solution? And here you need to be able to tie how you explained that problem to what the value proposition of your solution is, making it clear and concise. And you don't want to overcomplicate it. Again, because people are spending relatively small amounts of time going through your pitch deck, you want to be clear and concise and make sure that it's very easy to understand. Because if they recognize the urgency around the problem and you already accomplished that quite well, the problem is there, they're understanding, they're empathizing with it, and you get them excited about the solution. you're further on track in order to get them saying, okay, now this makes sense, problem, solution. Now how are we going to execute? What's the model behind it? You start getting them pushed along that path and really interested, because if you got me, for example, hooked on these first two, I'm going to read with a lot more attention and thoughtfulness into the rest. Whereas if you just kind of got me like blah, sort of, okay, well, I'm still flipping through, I may not perhaps have the same level of attention and detail in going through the next. It's important to like really nail them on these points. Using the same examples, super simple solution, web platform, save money, make money, share culture. These tie back to the problem statement that they had in the first place of about, for example, hotels leave you disconnected from the local culture. You got share culture right here. It's difficult to book with hosts. You got the web platform. I can save money. I can make money. It really connects the dots bit from one to the other. Almanac, it does it a little bit different. They do something that is interesting here as well, because in order for them to define the solution in something that's relatable and understandable, because their product is actually not the easiest for a lot of people to understand, they relate it back and say it's the GitHub for knowledge professionals. I think a lot of people have heard businesses described as we're the Amazon of, we're the Netflix of, we're the Grab of, we're the this of these different segments. And it can function well, but it can also function bad, because you need to make sure that it's relatable, but you're also making clear that yours is a specific vertical, and the solution is quite different and recognizable. And so that's an interesting tactic they've taken. And again, it's concise. Probably a little bit more words for my personal preference, but again, they did actually a pretty successful fundraise. All right, so problem, solution, business model. Now, business model, you can also include, you're also going to need to include some product and so forth, but I just kind of skip ahead to business model as the pillar, but obviously the product and all of that is going to end up needing to be worked into this as well. But essentially, when you've got somebody hooked on problem, solution, they need to understand, okay, well, how are you actually going to execute on the strategy and generate revenue around the solution that you're proposing? How does this actually make sense from an investment standpoint, from a practical standpoint of being able to execute on it? This segment is generally an area where a lot of people struggle in order to make it clear and simple to understand. This is also one that frequently occupies the most amount of pages within a deck, because it's frequently difficult to understand. So don't be shy about breaking it into a few more pages. That's perfectly fine, but you want to make sure, again, the storyline flow of this makes sense, and a good use of graphics or flow charts or visuals can really work best, because they can say, the cliche saying of a picture says 1,000 words. It's quite true. You can visually present the complex information of a business model in ways that are easy to understand, as opposed to trying to put paragraphs of explanation. And it sounds quite obvious, but I mean, if an investor doesn't understand how you make money, it's going to be really hard for them to commit their money to you, because them committing their money is an investment, and an investment needs a return on investment. And if they don't understand how you're going to make money, how can they understand or have any confidence in some form of return on investment? So there's a lot of pitch decks out there that have really nailed and done well on problem solution, but then don't have very good sections on the business model. And I'm talking pitch decks specifically. I'm not going to say that the businesses themselves don't have good business models, but there's a lot of pitch decks out there that just don't convey this message or this part of the story very well or very clearly. So I'm going to revert back to some of the examples again. Again, this is just getting into the monetization aspect. Obviously, the pitch deck had some additional detail in it, but when you look at this, it's quite clear on how they're making money. We take 10% commission. We do 10 million plus trips at a $20 average fee, and that is 200 million. So this times this equals this. Very easy to understand. Whether or not somebody is agreeing with it and mentally validating it is a different question, but this is extremely easy for somebody to understand. The way that this company did it was a little bit differently. They ended up essentially looking at, okay, well, here's our tiered packages that we offer. And oftentimes when a company like this is going to an investor has seen a lot of SaaS businesses and these types of companies. So they're able to quickly do that sort of mental math. And there's probably a few slides earlier that are showing market size and what the opportunity is. But somebody could very easily look at this and say, okay, so pro model is 10 per user per month. If I want 1 million ARR, that means I got to do 90,000 per month. So I need that 9,000 users per month paying this $10 in order to get me to that point. Now, if I start expanding on that, now I'm going to start saying, okay, well, then from there, what do I need the growth in order to get my multiple of capital, et cetera, et cetera. So people are able to do a lot of those mental maths. Again, I think this particular pitch deck used a lot more text and otherwise than I generally go with, but this is a very easy graphic for me to understand what's their revenue model, what's their pricing model. All right, so another key component, and I can't, the team section is often at times only like one slide or two slide, generally one slide, but it's a very important slide because early stage investing is very much a people business. And you want to make sure that you're conveying that you are the team, you are the people to take this bet on. Because the bet, there's a lot of uncertainty that goes on with what your startup is, what you're proposing, etc. And the team is what kind of anchors that back into reality as far as, is this something that I think they can execute on? And so it's really tough. And I see a lot of slides out that want to try and put a whole bunch of information on the CV of the CVs and the experience of the individual founders. But when you overload the slide, you kind of lose some of the attention because now I'm lost with this massive text. So you want to try and zero in on what are the most important critical factors that somebody should know about you in order to understand that you are the right people to do this, that you are the right people in order to execute on it, and focus on this specifically. Why can you achieve this? Early stage investing is a people business. You need to demonstrate that you are the ones. So flashing back to these examples again, there's a decent amount of text on here, but they're actually quite brief. There's not a whole lot of detail on any individual one. It's quite clear. It's concise. The standard 3 form is pretty common when you look at pitch decks. This one, on the other hand, again, this is one of the examples that this is a good example because it's quite crowded. Putting 6 people on the same slide is not common when you look at pitch decks, but when you start looking at it, it kind of conveys why, because they're talking about their startup veterans. And they're trying to overemphasize the quality of their team. Co-founder of this, director of that, co-founder of this company, CTO of this company, director of this, head of digital, head of this. These snapshots of their experience do convey quite well, like, wow, this is one heck of a team. Now, this leadership, this the people first sort of focus in early stage investing, this really gets it across, right? All right, so that's the team. Let's talk about traction. Now, this is a bit of a fuzzy one, to be honest with you, and I say fuzzy because it's not very clear, because depending upon what your company is, what stage you're at, what market you're trying to do, there's so many different factors that make what is traction means a lot of different things depending upon what it is that you're doing, where you're at, what stage you're at, etc. So the key aspect here is really just trying to show the growth that you've had, the achievements that you've had thus far, that demonstrate that you're getting momentum, that what you're promising that you're going to do, you already have tangible things, accomplishments that you can point to that you've already done that signify that you're on that right track. And it could mean, client acquisition. It could mean revenue amount. It could mean you might be pre-revenue. You might have no clients and no revenue, but you could have patented some technology. You just entered into the sandbox as a fintech company. There's a lot of different things that could mean of what the traction is, and it's important that you kind of highlight what is the most demonstrable characteristic of what you've done that shows that you're going to accomplish all the rest of the stuff that you need to do, so that problem solution, business model, all of these plans that you're trying to demonstrate here, that you're providing the evidence. And then also, like, a positive of demonstrating this type of traction is it showcases that you know what to measure and why, and it illustrates whether or not you have a clear understanding of what your clear drivers are, because you're highlighting it for a reason. If you're conveying these are my traction metrics, you're saying these are the drivers of my success. And it'll be up to the investor to see whether or not they agree. But that's the intent of what you're trying to convey here. You're demonstrating your understanding of the business and that you're capable of executing it by demonstrating your traction. So I'm going to toss this one out here. This is not the Airbnb one, so this is a different one. But when they're highlighting, hey, we've done 150,000 in annual revenue run rate. We've got this many users. We've got these great margins. We're growing 40% a month. We've done this and that. It's short and sweet. It's a handful of items, but oftentimes for an early stage company, there may not be a ton of things to highlight. Maybe they could have done a graph or a trend over time, but it comes across. And so here's a different one. So they're talking about before their public launch, that their growth loops are already spinning, that they've been in stealth mode in order to get these things acting. And they're saying, hey, 30% of our contributors are contributing more than once. 20 of these are coming from referrals. That's the loop. Now we're getting these flywheels. 10 average customer demos per week. They're moving these sort of things. So again, what you highlight will depend very much on your business, but what each of these are trying to convey is that these are the key drivers that demonstrate that they have success at this point and are headed in the right direction. And so once you've got all of that, now you're trying to wrap it up with the opportunity. And when I'm saying the opportunity here, I'm not referring to the market opportunity. I'm actually saying that this is getting into what's the investor's opportunity. So you're essentially trying to recap with your elevator pitch sort of thing in order to build up to your ask, to kind of summarize up, get back kind of the capstone to the pitch in order to bring that investor back, and then perhaps show how much are you raising? What's your use of funds? What sort of milestones are you going to achieve? What's the future look like? What if I raise this and I use it this way, what am I going to be able to achieve so that the investor gets an understanding of that investment opportunity? What is my money going to do for you? What are you going to use it for? And what are the outcomes that I'd be looking at in regards to your growth trajectory because of it? And so it's very important when you're highlighting this out that you have some level of specificity, because it shows that you have done your homework. You don't need to do this massive breakdown on what your use of funds is, because that's going to be something for a later conversation. But you should highlight specifically the amount that you're asking for. And one of my personal pet peeves when it comes to the ask is when I see a large spread. So if somebody sends me something and says I'm raising between 500,000 and $1 million, my reaction is, okay, well, which is it? 1 million is 2 times 500,000. Do you really know what you want? Have you thought all of this through? Just tell me one number. Be specific and have it thought through, because if you do get that next conversation is going to end up digging into all of those details. It's going to start asking a lot of those specifics, and if you don't have it, that's an easy way to end that conversation, likely for good. So very important in order to understand and build up to that ask. And when you think of this flashing back to your storyline, it all needs to kind of flow into this, that I understand what the problem is. I get the solution. You've shown me your product and your business model. I see that you're the team to do it, and you've already got this amazing traction. So now you show me that this opportunity and what the upside of what's next. That's where you're trying to get me excited about. So a couple of examples, here, flashing back to the Airbnb, asking for 500,000. It's 12 months financing with the specific objective of reaching 80,000 transactions. If they reach 80,000 transactions at an average fee of $25, that's 2 million in revenue over 12 months. Now, mind you, if I recall the number correctly, it was $20 further back. So maybe this is the version of the template that I have, but that average fee was actually $20 in the slide that I showed earlier. But that's getting a little nitpicky. But the point is, ask, here's the amount, this is what I'm going to do with it. This is the expected outcome. If I get those 80,000, this is what I'm going to end up being able to achieve. This one, as has been the case with this company's slide deck throughout this, is that they're quite busy in regards to it. And so they're raising 3 million so that they can get to X million AR. And this version, some of it was ended up being redacted because I had to use publicly available examples because I can't share private ones. So I had to use examples that were already out there. But it's again, this is the 3 million. These are my milestones that I'm going to end up getting to over time. This is what I'm going to do in H1. This is what I'm going to do in H2 2020, and so forth. This is what's going to end up happening. So those are the components. And again, not an exhaustive list of the topics that you can cover in your pitch deck, but the key components in my opinion. So I had said that we'd look at some data, so let's switch to some data and talk about it. And so when you look at the percent of decks that have these sections, team, problem, product, solution, transition, market size, when you get further in, the ask, I think, should always be in there, but you can see that some of the successful decks don't actually have it. Financials, some of them don't actually have it. Why now? Some of them don't actually have it. So there's not a one size fits all, but there are some key pieces that you need to be aware of. Again, this data comes from DocSend as well. Order and pagination should fit the storyline. I said when I was going through those topical areas, the number of pages per section. And so if you look at this, the sections that have the most, product, business model, traction, these are the ones that end up taking the most amount of space, oftentimes the solution as well. But if you look at team all the way off to the right, team is a very small number of pages. It's like 1.5, I guess, since it's between the 1 and 2 line. So some companies do too. But it's a very, very important, very important slide. So again, no one size fits all, but fit your storyline and make sure that you understand. It's understandable if you need a few pages in order to adequately explain what you're doing. So some other quick data points that I'm just going to toss out here real quick is that on average, an average deck length is 20 pages. I've seen some come in very long, and honestly, if people open up your deck and it's a lot of pages, you'll probably get them closing it right away and saying, okay, if it's 50 slides, I'm going to have to come back to it when I have more time. Some other interesting things, is successful business model. If successful decks have a slightly longer business model section, but they spend slightly less time on it. They spend 60 seconds instead of 75. Is that because using a few extra slides makes it easier to understand and they can go through it more quickly? I think these are interesting data points that you can extract when you use these sort of trackers. Longer traction slides, these sort of on average, product slide being 3.5 pages, 87% of the successful decks had it, whereas, 76.5 had only 2.6. So these are good kind of guides in regards to understanding how to build out your pagination and so forth beyond just what's the topics. All right, so the last thing before we get to the live, before we get to looking at the actual deck is common mistakes that drive investors crazy. So I'm just going to highlight a couple of them. There's oftentimes a tendency for information overload where you're just trying to put so much information out there that you want me to understand everything about your business, and it can end up being too much. I mean, remember, this is to get me enticed to want to speak to you again. So you're trying to get me interested in order to have that follow-up. Another pet peeve is lack of clarity. When you're trying to explain everything, you may actually end up explaining nothing, or at least not anything very well, because of a lack of clarity. Maybe it's because the story didn't flow correctly. Maybe it's because I didn't understand the way that you explained your business model. And then there's also an aspect of tailoring it. It doesn't mean that the entire deck needs to be specific for one individual investor, but there are certainly going to be instances where, a slide that you normally leave in the appendix because you know that the investor that you're targeting is interested in certain things. You can tailor the deck a little bit. If you know that an investor is very interested in ESG, maybe adding back in a slide that speaks to ESG so that investor sees that part of the story, whereas maybe some other investor just doesn't have as much concern. So you want to kind of focus on the storyline that fits them while keeping true to what the facts are. It just means, are you skipping a chapter or not? Or are you including that? So tailoring a little bit is quite important. All right, so that's kind of the summary there. So I hope all of that was clear. I violated some of my own rules with some of the wordiness on my own slides. So do as I say, not as I do, sort of thing. But hopefully all of that was quite useful to everyone. So I think at this point, I'm going to go in and start looking at our volunteers pitch deck and just kind of thinking out loud as I review it. And not going to hold back. I'm going to try and just do honest opinion as I'm thinking out loud as I'm going through it, and then afterwards can have a conversation with Jeff about it. Okay, so here we are. We're looking at RentGuard, automation and rental property. So we're looking at a prop tech company. Who we are, B2B SaaS platform that helps property rental operators. They automate, they centralize, and they analyze. So empowering digital transformation, provide analytics. I think this is quite clear and understandable. They're looking at property rental operators that are businesses. So not looking at the individuals, they're looking at the businesses. The problems here for the rental operators, I think reiterating the rental operators, maybe not 100% necessary since that was already put there, but no big issue. Target long stay operators. Okay. Yeah, you could almost look at that as putting it into another explanatory slide that could actually kind of perhaps pair in with a market slide. But okay, there. High administrative costs to manage month to month, delayed rental and utilities collections, heavy loads of manual, messy documents, keeping. I think the problem is quite clear. I think some of it is maybe, you know, I don't know whether or not the higher administrative costs I necessarily need the managed month to month portion of it, or just leaving it at higher administration costs, manual reconciliation, messy documents. Some things like messy, you know, some of these things, superlatives, I don't always put in, but it's kind of, does it fit with the storyline? So at this point, I can't really comment on that, but you know, if they're physical and offline, chances are they're probably pretty messy. So it's probably well suited in order to be in there. All right, solution. Okay, so how does this tie into what I just saw? So they're a data-driven way of running business. They're automated the rental collections, so that's something that they just keyed in on. The rental collections, so that's tying into an invoicing, rental recovery. That's okay. So that's slightly off from the problem statement, but it seems like it's very closely connected with the collections. I guess the aspect of being not on time with the rents and utilities that he did highlight there, utility collections. So it's a lot of it is centering around invoicing and collections. And the e-booking, I'm not quite sure. That seems to be a little bit on the outside, but I guess that's the administrative managing the month to month. All right, so looking at next slide, they have a market slide and they're focusing on Claim Valley here, which is okay. It does raise a question on why they're looking at just a narrow geography, or if they're later going to end up talking to me about the broader opportunity beyond just this. But, you know, it's 60% of the market in Malaysia, so I can understand, you know, if it's early stage company, focus on where the density is. I think probably this pie chart is not 100% necessary. If there was something that just said, you know, 60% of rental market in Malaysia, 10 million population, I think we can do away with that, because now I see 5 million tenants population. It could be a little bit clearer with the two columns. We have the rental market size, so it's sizable. You know, it's over 1 billion in rental. There's over 1 million rental properties, lots of tenants. I am quite a little bit curious on how 5 million tenants are in 1.25 million rental properties. So it seems like there's four tenants per. So there's a lot of shared occupancy, I guess. So, but that's kind of curious. And then they're going to want 10% of this market. So all of that, you know, over the course of 3 years, it's hard for me to gauge on that, but at least it sets a target. All right, so the B2B revenue model, so it's recurring collections, the e-booking module. I think I still need a little bit further of an understanding on the e-booking. I think the rental collection is quite clear. I think the word e-booking kind of leads me into what I expect it to be. Um, 500 per month. That's quite clear that it's a subscription-based recurring fee. Rental collection module. Okay, so I think this kind of flashes back to where of that chart with all of the arrows pointing out on what they have. So the key is seems to be the top two that were there is the e-booking and the rental collection, 2% fees. So if I do bounce back to that prior one, I'm looking at 175 million target of rental process. So they're talking about what is that, 3.5 million in annual revenue is their target. The $500, I'm not sure whether or not that's off of the 500,000 tenants. Probably not. 125,000 properties. Maybe that's off of that, but that seems like a bit of a large number. So not 100% sure on that. And then we have moving into, I guess, this is the model expansion of what they're going to go into. So core is the rental collection, okay, solving major pain points. And then getting into, okay, utilities is launched, e-tenancy. I think this is okay. I haven't seen the rest of it, but I'd be curious of whether or not this slide would actually be better suited a little bit further into the deck when we start talking about some other forward-looking statements. Current traction, this looks good. It's a nice upward movement. Looks like he's providing it quarterly, so things are going in the right direction. A sharp rise certainly is from third quarter of 2020 into fourth quarter. So they've made a nice jump. Some other current tractions. They were actually launched in 2018. Number of paid customers. So now I'm having to jump back in my head of whether or not this is the 500 per month or if this is the people that they're charging the 2%. So it's not 100. Active property negotiators. I think this is terminology to look at back into. He kind of defined out property operators. And so it's a question in my head now of whether or not they're mixing rental collection. So 10 million, 2% fee, that's 200,000 that they've done. Accumulated revenue, 250,000. So it seems like 50,000 probably came out of that extra 500 bucks a month that they were charging, if I did my mental math. Competitor analysis. So I guess this top part is talking about them, maybe that their total funding to date is 2 million, that their gross rental value is 10 million, that they've got 1,000 properties, trusted by over 50. So these ones, I'm assuming that Subhome, Cozy Home, I'm assuming that these folks are people that trusted them and not competitors. I think I would probably look at this perhaps as just kind of shifting it onto another slide, perhaps, and doing kind of, trusted by maybe a logo farm of if we have some good property developers and other ones that they have, because tossing up some well-known logos can oftentimes be a good thing. Looking at the competitor analysis with Speed Home, H Organis, or I'm not sure if it's H Organis or Horganis, but either way, I'm probably mispronouncing it. And then Cozy. Okay, I get this. I think if I was to make a suggestion on this one, because really we're looking at the comparison is just on founded, funding, and serviced. So it's okay to have funding and service, but it makes it come across like this is what you're competing on. And so I think what would be good here is to look at, oftentimes when I see some of the competitor slides, they put it into a matrix of what are the kind of the services that I offer, and then do like the red check mark or the green check mark of who does what. So it could be interesting to see that and try and highlight what's your core value proposition relative to these other folks. if you guys are all in the same space, why would somebody choose Rentcard as opposed to Speed Home? I think Speed Home is probably a pretty familiar name in Malaysia. I know I've heard it around here. So I think that's certainly something that I would recommend on that is kind of highlighting that competitor analysis a little bit better, because I'm not getting the real understanding of the differentiation, other than the fact that they've raised more money, which, you know, just looking at if we're looking at competing on who has more money, I think we're a little bit behind in the game if they've gotten 17 mil already. All right, so funding utilization. This looks like the ask. And so looking at raising 1 mil before the end of the year, looking at VCs. I don't know whether or not this is saying that the 1 mil that they're raising, they're looking at combining VCs, Cradle Grants, ECF, and existing shareholders, or if these are the options. I'd probably just ditch this, because whoever you're sending this to is assumed to be the target. So I'd probably get rid of, I think I'd get rid of that. I think the purpose we could probably simplify here. And so we could likely end up doing, I don't know, maybe a pie chart with a cutout, where we have R&D expansion, and then maybe we don't even necessarily need to get into all of that, because again, we're fairly early. So, you know, market expansion and product R&D may be sufficient enough in order to entice somebody. And then focusing on how that's going to fuel the 10x growth of our rental collections. Now, the thing that's a little bit throwing me off is to fuel the next 10x growth of our rental collections here under purpose. But then if I look at to achieve with this new funding, I have a 5x goal in rental cases. So that kind of means that either my average rent is doubling, or there's a little bit of a disconnect there for me. So the numbers from one to the other is just raising a question. So maybe it's clear, but it's raising a question in my head in regards to one's 10x and one's 5x. So what's going on there? And then here we have a 20x. I think there may end up being an easy way in order just to be able to clarify these multiples that we're targeting. I'm assuming this 20x is just because it's over a longer span of time, and that's the explainer on that. B2B segment, continue to scale, product expansion, B2C segment. I think all of this is fine. There's likely a way of conveying the messages that are in these numbered points in a more brief way, to where we can put more of the focus, the mind's focus, because, you know, some people are more of a look at the written versus the other. I think the main point is to get people excited about this 20x. The green certainly highlights my attention. So I think from a design and color standpoint, it brought my attention there. But I think that's good. The one thing that investors probably going to highlight onto this is that if we're raising 1 million, it's going to take me this many years in order to get above 1 million in revenue, and then the scale up. So I think the big question is going to be is the speed, and let's call it the capital efficiency of that 1 million capital. Is it turning around and generating sufficient enough revenue fast enough? And again, maybe that's a question that somebody that's insider. I'm more of a generalist, so somebody that's insider on property may end up having it a little bit of a different view. All right, cool. This is I always love the founding. So we got 3 founders here. They co-founded a business together. They helped high net worth individuals. I think, okay, so this one, I think if there's a property management business, I think it could be interesting if that business is highlighted, perhaps. I don't know whether or not it's able to be highlighted or otherwise. They got the book here. If they exited the company, you know, these are interesting data points, but I'd be curious of whether or not instead of the number of words, we could put like logo of the company, exited, value, what was kind of the outcome, so that we could kind of highlight, Jeff and Clement exited this company for this many millions of profit. We also wrote this book, so we're topical experts on this. Chin Nam is IT expert, 12 years. So I think it's good. I think probably I would look at some of the wordiness and perhaps the ways in order to convey the same information in a bit more concise and visual way. Okay, so this is going into the angel investors and the institutional investors. So they've got some good angels here. They've got some good institutional investors. I'm assuming they did their ECF through Pitchin. They're in iLabs or were in iLabs. Cradle supported them as well, so that's all good. And end of the presentation. Cool. So I think overall comment is I think the front half of it was quite good. There was some questions. I think the competition slide was probably one of the bigger points that I triggered on. And then there's a few points of clarification as well. But I think overall, I think it's a pretty interesting one. I think the revenue opportunity on that last one, when we're talking about 1 million and the pace of scaling up revenue, there's likely a relook at that. But that's something that since Jeff, hopefully I didn't scare him off, is kind enough to come back for business projections on Thursday. Perhaps we can look at what's going on there. So I think that wraps up that. So what I'd like to do now, I'm going to stop sharing my screen. And if we could highlight Jeff, I'd love to get him here and just kind of ask his opinion on, was there anything that I said as I was going through this review that surprised you?
Yes, Kevin, thanks for the comment. And thanks for really doing a very quick sharing, and then I did learn a lot from that. I do have some questions for you if you don't mind after that. So let's talk about the comment first. Yeah, I think we always especially with this flow of tech and all these things, I always got this question from the VC about the competitiveness of us, because I think the competitors analysis is really not doing well. So the VC they don't get the pictures of it. They don't really understand what we compare with, and then they always ask me the questions like when they follow up, and I do think that I need to improve that one, because what if those VC that they never ask me and they never respond it, and they will just skip it, so then I don't even get my chance, you see. So I definitely need to improve that. That's I do agree with you at all.
Cool.
Yeah, so Kevin,
there's a common format that you see a lot of people use on that as well. There's a fairly common format, that sort of matrix where you have the column headers of your competitors, your row headers are the different points. The one caution that I would say is don't try and flood that matrix with every single service, because if everybody's doing something, unless it's 100% core that you want to highlight to ensure that people know you do it, it's not a differentiator. So kind of focus on points of differentiation when you put something like that together.